Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about Home Depot Inc. And that's because they are announcing earnings on Tuesday before market hours. So if we come over here to calendar, you can see that they are going to be having their earnings call at 9 a.m. on this upcoming Tuesday, August 15th. Now, this is a company that has had a stellar first part of the year. You can see from year to date, they are still up, although they have not hit that new high like we saw in February of this year. This is another company that did very, very well throughout the COVID timeframe. Again, there was a lot of home construction. There was a significant amount of home renovation. And then this is another company that, as the expectation is that people are going to continue to spend on new construction for homes amidst the current housing shortage, as well as for the individuals staying in their homes, they're going to continue to remodel and spend money on those homes. The expectation is that the company will continue to perform very, very comfortably. Now, Home Depot is somewhat of a stalwart. There's not going to be a lot of volatility in their earnings reports. And what we want to be looking at is not necessarily the report itself, although don't get me wrong, that's super important, but we want to know about the forecast. Now, as of this point in time, the current expectation is that they are going to be keeping its revenue forecast, but again, that's what we're going to be looking at. But their expectation for the remainder of this year that they reaffirmed on their annual investor meeting or shareholder meeting earlier this year was that they are expecting that home improvement market will continue to grow this year, and that's going to lead sales growth that's going to be between 3 to 4% this calendar year. Now, the important thing to note there is that this particular quarter, they are expecting it to be lower at $42.21 billion for the second quarter, which is down 3.6% year over year. So the two things that I want to highlight there is one, with 3 to 4% annual loan growth, or not loan growth, but annual revenue growth, that is somewhat worrisome in an environment where inflation continues to be north of 2% and in some cases north of 3 and 4%. That means that $1 tomorrow is going to be worth less than $1 today. And that means that these dollars, when they were forecast, were worth more than the actual reported earnings. So despite the fact that they're continuing to grow and to grow profitably, as you can see here on the net income side, Q4, Q1 continues to look good, but total revenue continues to be declining, despite the fact that on a year over year basis, it is very small or very minorly increasing. So the question is, are they going to be able to break out to new highs, or is the broader market pressure going to weigh down on a company like Home Depot? Now, there are some great things about the stock, irregardless of the current pricing, irregardless of earnings, and that would be pointing to their current very strong 2.5% dividend. Again, that is currently coming out to $8.36. That is currently paid quarterly. So with the company sitting at a $330 stock price, the question is, are they going to be able to continue to grow from their current market capitalization of around $330 billion, or is earnings going to put downward pressure on the stock? Let me know in the comments down below if you own Home Depot stock or if this is one you're interested in. If you made it this far, thanks for watching. Please leave a like and subscribe. Thanks. Talk to you later.